Hello, my name is Eddie Topic. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat.
Chicago wheat. The main activity here during last summer had been the fall below the significant neckline extension, currently 660.5, of the small October 2020 to November 2020 head and shoulders top, which you can see highlighted on my daily chart in dark blue. This neckline has a fairly wide congestion area clustered around it, formed from late April to mid-July 2023 from about 609 up to 679. That's including the gold-coloured long moving average, currently at 626.5, the green-coloured short medium moving average, currently 611, and just below it now, the mauve-coloured medium moving average, currently at 605. It had been this congestion area that had pressed down on top of the rallies throughout September, October, November, December 2023, and now into 2024. Some while ago, I pointed out the cat's ears pattern over June and July 2023. Now, in essence, this is a double top formed in an overall downward moving market. The potential below for such a cat's ears pattern is at target X2 in the 502 zone. However, before even looking down that far, it's worth looking closer at some interesting supports, notably the September 2023 low at 570, plus the December 2020 low at 566. In November 2023, we saw prices punch down through these, dropping down as far as the December 2020 low at 566, but failing to make the requisite 2 consecutive closes below it, before storming back up, with a weekly key reversal up at the end of November 2023. Now this move up pushed up through moving averages as far as the capping long moving average over here, where it stopped after trying twice, possibly 3 times, before in early January this year heading lower again. The bright red highlighted March 2022 to date downtrend, currently at 579, initially helped push prices lower, though it has been severely challenged. We never saw a repeat of the late November 2023 move down, with last week's prices punching down through the December 2020 low at 566, but immediately turning back up this week and once again not making the requisite 2 consecutive closes below it. I can't say we will see a repeat of the action of November, but it's worth bearing in mind. The action since late December last year to late January this year has allowed me to draw a new bearish shift visual, highlighted in bright green on my daily chart, and which does give the overall bearish angle of attack, more or less, of the recent market. Prices are currently in between the lower time below, currently at 579, and the upper time above, currently at 603. This recent bearish shift pitchfork is repeated in substance, or style, let's put it, across most of the grains. The final thing I like to consider is whether we are forming a possible November 2023 to date double bottom. It's way too early to fully formulate this idea, though it doesn't necessarily look so at the moment, but it is worth considering, and considering it, well, that would be fine. Chicago corn. The medium moving average, which is currently at 477, had been an effective cap on this market throughout 2023, most recently in October, November, and then December. In December to last year, when it was penetrated, it still held down the market. Additional to the declining medium moving average, you also have the same old congestion band overhead between 490 to 498, including the 2021 low at 498. Plus the short medium moving average, currently 463, which had untangled itself from the medium moving average. This brings me once again to a more recent factor highlighted in bright red on my daily chart, and that's the July 2023 to January 2024 downtrend, and the flat support, now resistance, also highlighted in bright red, also since July last year, and that's currently at 469. Together they made a descending triangle that saw the market push down below the lower trendline support 6 Fridays ago. Now, to clarify my thoughts on this move, I'd refer to my comments made 10 weeks ago when I said, and I quote, The question now is whether the support will hold or the resistances above. We seem to have some pretty strong overhead resistances, but below the lows formed over the summer around 473. Well, if 473 doesn't hold, well then we do have some congestion starting at 463, but it isn't that strong, and I'm concerned that the accumulated ammunition overhead from the descending wedge pattern, the bull channel, and now from the new descending triangle, well, they may punch down through it all fairly easily. End of quote. I'd only add the following, which I said 4 weeks ago, and I quote, some potentials below for the descending triangle pattern. Thus, the initial target X will be down in the 424 zone, with a secondary harder to reach, much harder to reach target X1 below in the 374 zone. Target X is doable, but target X1, well, that is off the bottom of my daily chart. I can only add that target X was reached this week, and I have raised up my daily chart such that target X1 is now visible below. Kansas City wheat. There is still a hell of a lot going on here within a fairly narrow piece of market action, not in price movement, but in narrow piece of market angle of attack action. To explain more, 14 weeks ago I highlighted a feature I saw whilst looking at the action since August 2023. It was a descending expanding wedge pattern, currently 596 to down off the bottom of my daily chart, which is highlighted in dark blue on my daily chart. This is not the best example of such a pattern, but as I said 12 weeks ago, and I quote, it does hold merit, and I would look to this pattern with some immediate idea of the move downwards, end of quote. Well, it does hold merit, and has shown the way lower, but it has been pierced during its lifetime. I've also seen the development of two new patterns, one of which involves the descending expanding wedge pattern itself. So the first pattern involved the lower trend line, the one highlighted in dark blue and off the bottom of my daily chart, and that's of the descending wedge pattern, and then the downtrend of the September to November action, currently at 506, highlighted in green on my daily chart. Together they make a bear channel located inside the original descending expanding wedge pattern. However, this one has failed, and I will retire it as an idea next time. Then again, if we look purely at the upper and lower dark green trend lines, we'd see a descending wedge pattern that ran out and will also be retired next time. These are what my thoughts had been. 12 weeks ago, we had a break up and out of the green descending wedge pattern. However, this move higher ran into the combination of the upper trend line of the descending wedge pattern and the green highlighted declining short medium moving average, currently at 620. Indeed, for a while, this pair of dynamic resistances held prices down. However, at the start of 2024, they had started to separate, and accordingly, their combined strength, which was greater than their individual resistances, had started to diminish, but not before having been tested in late January. The market, not the resistances, gave way, and we saw the market head lower. These moves also raised a question as to whether, and I quote, the move higher stimulates the action since mid-August, that is mid-August 2023, since mid-August into being a descending scallop pattern or not, end of quote. It also raised the idea of whether the late October 2023 today action could be a possible double bottom. Last week gave an answer to those question ideas, and it was no. The market is too stretched out to be a descending scallop pattern idea, and as for the descending triangle idea, well, that looks like it has become a possible last November 2023 to mid-February 2024 descending triangle idea, highlighted in purple on my daily chart. That's currently at 590 to 617. This new pattern idea has not been fully confirmed as yet, but I can lay out some ideas below. Thus, the primary target X would be in the 539 zone, with a secondary, hard to reach target X1 down in the 487 zone. One final point. I've drawn an early December 2023 to late January 2024 bearish Andrews pitch wall, highlighted in bright red on my daily chart. And that's instead of the bearish shift pitch wall. But this bearish Andrews seems to be a better fit in showing the bearish angle of attack. The market is at the moment just over the middle, well, just punching through the middle time, which is currently at 5:16.9.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final important bit.